Welcome back. You're watching Market Fatafat right here on ET Now, a show where we get you answers for all of the stocks that are buzzing in trade. So let me bring on board our technical analyst. Then we have Nirav Chheda who's joining us on the show. A very good afternoon to you, Nirav. And Nirav, let me come first to you. The first stock that you're going to talk about is electronics Mart, I believe, email. It's written over here. But newly listed counter, enough of chart history to predict where it's going in the short term?
This stock actually got listed in 2022, October, and since then, it took about 8 months of consolidation to break out. Finally broke out above the 100 levels, and then from there it hasn't looked back. I believe this stock has it in it to move up towards that 175, 180 odd levels. So look to buy the stock at current levels. A very good formation of higher top, higher bottom is going on. It has come down from 160 odd, so it's a good level to accumulate this stock. You can keep a stop loss of around 140 for your longs, and around 175 odd book profits.
And talk about the next stock that is in focus, and that is SKF. Why is SKF in focus? This is on the back of a brokerage note that we have coming in from ICICI Direct, where they're maintaining a buy on SKF India. They believe that SKF India is actually well placed to ride the strong demand trends that one could see coming in the market, led by the focus on high growth sectors, new product developments, as well as increasing localization of the products by the company is something that would lead the growth for the company. Now, they also believe that the operational as well as the financial performance are to improve considerably in the coming period, as well as they are estimating the revenue, EBITDA and PAT growth at 15%, 20% and 22.8% CAGR growth over the next 2 to 3 years is what they're expecting. Now, they're maintaining a buy rating given a target price of 6,400 rupees per share. ICICI Direct is giving SKF India a thumbs up, and seems like today the stock is also holding on to gains of 3%.
All right, moving on then, Nirav, coming back to you. Parag Mills, how's the charts looking for this particular counter? Do you see a scope of an upside or further upside after such a spectacular run?
I just want to say that Nirav has actually picked up all the stocks that are up more than 100%, at least the first two months in the last 6 months. So that's interesting.
Is that the theme that you're going after, all these stocks that have been multi-bagger, at least in the first 6 months of trading?
In the markets, the mid-cap, the way they're moving up, there is no stock left which is, 10-20% there, and if they are there, the patterns are not very attractive. So, looking for stocks with good patterns and good volume profiles. So this is one such stock where even though it has come up from 60 odd levels to 200, but mind you, this stock has come down from 350 to 60 odd levels, stayed there for about 2 years, and then this breakout has come in. The actual breakout has actually come up above the 150 level, so it is quite cheap even at current levels. I believe it can actually regain its lost glory. It can go up towards that 300, 320 odd levels. So definite, looking very good at on the charts at current levels. Look to buy stock at current levels, even on some dips up to 195 or 188 should be the stop loss in this stock. This stock first target is around 265, which is where
I believe we've lost Nirav on that note, but nevertheless, let me talk about a stock that is not losing its way, and that is Zomato. If you look at the stock, third consecutive day of gains coming in for this particular counter, 5% uptick that is registered in today's trading session. This is on back of a block deal. Today you had 1.4% equity actually trade hands via block deal. We all knew for the fact that SoftBank Group owned SoftBank Vision Fund, as SVF, was all set to offload stake in Zomato, and we were expecting an exit of approximately over 1% stake, and that's exactly how it's transpired today. We had approximately 1.4% equity change hands in trade when it comes to Zomato, and post that block deal, you can see the stock actually soaring as much as 5% in today's trading session. Also, you had HSBC that came up with a very positive note on Zomato as well. So that's also contributed to the gains coming in for this particular counter. Third day in a row, Zomato soaring in trade, 5% uptick as we see right now. In fact, nudging the 100 rupees per share mark.
Okay, surely keeping an eye out on Zomato. But Nirav, coming back to you, the next stock that you picked up for us is HDFC Bank. And also, I think you were mentioning the target price when we snapped the line with you. So, what is the target price for Parag as well as HDFC Bank? What's your view on this one?
Yeah, so the target is around 255, the first target, and then 320 and 350. 260 odd is where you book your some profits, 50% profits. Now, looking at HDFC Bank, see, HDFC Bank has been a laggard, and finally there is a good reversal pattern here. I believe this stock can move up quite significantly, so look to buy the stock at current levels. It can come up toward that 1680, 1700 levels and probably even beyond that. It's a good level to buy at. You can keep a stop loss of 1550 for your longs.
Alright, so that's the take coming in from Nirav on HDFC Bank. But Ashesha, GR Infra, why is this particular counter in focus today?
The stock is slightly off the highest point of the day, but despite that, sitting on with gains of nearly 1.5%, and this is on the back of order wins. So the company yesterday informed the exchanges that they've won two orders, two HAM projects from NHAI with a project cost worth about 1500 crore rupees. So there are two projects. One is in the state of Karnataka and other is for a section of National Highway 748A. One is for 716 crore rupees and the other is for about 750 crores. So cumulatively order win worth about 1500 crore rupees. On the back of these order wins that have come through, the stock is gaining in trade today. As I mentioned, slightly off the highest point of the day, but despite that, over 1% gains on the counter.
Okay, over 1% gains on the counter as of now as well. Let's move on to the next one. And Nirav, you picked out GNFC for us. How are the charts looking for GNFC? What is the indication that you're picking up? 11% return is what the stock has given us. So should we expect a further upside now, and how much upside?
So finally, I have one stock which has only 11% upside and not 100%. So yeah, this is one stock which has done nothing in the last 2 years. From 800 odd, it has been a snooze for this particular stock. Slow and steady formation, but just about a month back, it witnessed a breakout above 586 levels of the falling trend line pattern. And the retest has happened around the 540 odd levels, which was very important. And now I believe this stock is ready to move up to newer horizons and new range. It can come up quite quickly up to 750, 800 odd levels. The reversal is in place. Look to buy the stock at current levels. You can keep a stop loss of 580 for your longs.
Alright, that's GNFC for you. But Ankita, talking about Cipla, why is this in the spotlight today?
Cheryl, Cipla is in focus today on the back of a note that came out by Jefferies. Now, they are saying that the traditional strategy like bringing on new management team, cost restructuring and acquisitions have driven, operational turnaround followed by a valuation re-rating. Now, the PE interest in Cipla, if cumulated, would require patience and out-of-box strategy, including building a global specialty pipeline. And they feel that the PE firms like KKR and CVC Capital have seen success with investment in listed mid-sized healthcare company, and they see positive growth going forward for Cipla. And on the back of that, we're seeing the stock react. It's up 1% in trade on the back of this note by Jefferies.
Okay, surely keeping focus on Cipla on the back of the note from Jefferies. Let's move on, talk about Concor then. Nirav, what are the charts indicating for this one? What is your target price for Concor?
So, see, one of the few PSU stocks which has not done much, but now the pattern is supportive. A good downside has been seen. After that downside, the stock has come up above the 50 and 200 day moving averages. There's a golden crossover which has happened in this particular stock, so it is very likely that this stock will now start to move up quite aggressively. It can probably go up above the 800 levels. It's at good level to buy at. You can keep a small stop loss of 655 for your longs and go ahead and buy.
Okay, keep an eye out on those levels for Concor. Let's move on and talk about capacity infra projects. This one is in focus because yesterday, yes, there was a block deal that happened, and then we had some of the names that came in. Actually, the seller name has come in. We don't know the names of the buyers yet, but the seller's name is Goldman Sachs. Actually sold around 3.75 lakh shares in the company at a price of 203 rupees. Buyers' names are something that one should still watch out for as well, but the stock is in focus. We're seeing gains as of now of 1.5% coming in on the back of the bulk deal that we saw yesterday, and the names have come in the evening as well.
All right, let's move on and let's talk about Jio Financial. Earlier last week, when this particular stock actually listed on the bourses, the only talk was that the fact that it was locked in the lower circuit, but the scenario has changed today. It's locked in the upper circuit of about 5%. Multiple block deals have taken place on this particular counter. That's also one of the reasons why it has actually spiked in trade. And let's not forget the fact that we brought you that ET Now exclusive that the promoter entity Jamnagar Utilities had bought 2.5 crore shares each on NSE as well as BSE yesterday, and the price range for that particular block deal was 208 to 211 rupees per share. So in total, if you see, the promoter entity had purchased about 0.7% stake via market purchases on NSE and BSE. This is what we reported yesterday, and post that also you saw the stock actually spiking in trade towards yesterday's closing session, and today as well. As you can see it on your screen, Jio Financial is locked in the upper circuit of 5%.
That is Jio Financial for y'all. But let's move on, talk about Lumax Industries on the charts. And Nirav, what is the target that you are keeping for Lumax Industries? 33% of returns is what we've seen in the last 6 months. What is it now that we should expect?
So this is one of the few stocks to watch out for. This is a slow counter, but slow and steadily this counter is moving up. Ever since it broke out, of that 4-year trend line consolidation, this stock has continued its upward journey. I believe this stock has broken out above an important level of 2000, retested it, and now again moving up. It can go up towards the 2800 to 3000 levels. Look to buy it at current levels. You can keep a small stop loss of around 2100 for your longs.
All right, moving on then, Ashesha, let's talk about Spandana Spurti, and this one also I believe is a candidate of block deal.
Yes, block deal candidate, and the stock is declining in trade today, over 3% lower in trade as we speak. And as you mentioned, it is on the back of block deal. About 2.7% equity changed hands via block deals today morning, which translates to about 1.9 million equity shares. And reports suggest that Padmada Gangi Reddy has sold nearly 3 million or 30 lakh shares today. Remember, she sold nearly 1.25 million shares on the 31st of July as well. So this is the second tranche of stake sale done by her in a matter of just 1 month. Now, post the current stake sale, she holds about 7.9% stake, which translates to 56 lakh equity shares. On the back of this block deal that took place today, the stock is in focus today, 3.1% lower in trade as we speak.
Let's move on and talk about Ramakrishna Forging. And why is this one in focus, Ankita, today? What's the news flow here?
Forgings is in focus today because the company has bagged an order worth 74 crores from a European OEM and Tier 1 supplier. Now, as per the agreement, the company will supply front and rear axle components for the next 5 years, and as per the company, this contract reflects a commitment of 1.65 million euros per year. That is a statement to the enduring partnership between the company and the industry leaders. That's what the management of Ramakrishna Forging said in a statement, and on the back of that, the stock is going to be in focus today.
All right, shifting focus then, let's talk about Nosil, Nirav, and I believe that you have spoken about Nosil earlier as well on the show. Now, where do you see Nosil headed from here on? It's been pretty choppy of late. 6 months chart definitely very choppy, but it's only seen spike off late very recently. Do you think that it'll be able to maintain that spike?
Yeah, so in this spike, two things have actually happened. It has gone above its 50 and 200 day moving average, which was a very important resistance earlier for this stock. It was able to cross this in the last few attempts. So finally, resistance has been broken. This stock has also made a very good base formation around the 200 to 20 odd levels. Very likely this stock will now move up towards the 260 to 265 levels. Also, chemicals are doing well. We are seeing buying coming in, volumes coming in. So all in all, everything is in place for this stock to move up. Look to buy it at current levels. 210 should be a stop loss.
Okay, keep an eye out on those levels for Nosil. Let's move on and talk about HCL Tech. Why is this one in focus? Because last evening, they announced that they have been announced as a preferred professional service agreement with Cloud Software Group, and this is to implement, upgrade, modernize, and provide services for the TIBCO product of the enterprise customer across the globe. Now, a business unit of the Cloud Service Software Group, that's TIBCO Software, provides real-time data for making faster and smarter decisions, and it's a data data intelligence platform where they have actually been announced as a preferred professional service agreement. They've tied up for that. So on the back of that, today we're seeing HCL Tech is in focus, trading with gains of almost more than 1% in trade as of now.
All right, moving on from HCL Tech, let's talk about MTAR Tech, and that particular counter is in focus in today's trading session. They informed the exchanges that they've been granted, industrial defense license for the production of C-41 SR system. And on back of that particular development, as you can see, the stock actually spiked in today's trading session, approximately 2.5% uptick right now on the fact that they have been granted industrial defense license, and this in order to produce actually C-41 SR systems.
Let's move on to the next one, and that is Tata Steel. Nirav, you picked out Tata Steel for us on this charts today. What is it that you are understanding now on the charts and technical front? 14% return is what we've seen in the last 6 months. But is there more upside left for this one?
So a multi-year breakout has come in Tata Steel. Our downward sloping trend line resistance was placed around 120 odd levels, and that has been broken out above with volumes. Also, a lot of shorts have been covered, in the FNO space. So I believe this stock can move up quite significantly from here. It has done nothing much in the last couple of years. So very likely the momentum will come in, and this stock can move up towards 145, 150 odd levels. Look to buy it at current levels. 114 should be a stop loss.
Moving on, Ashesha, let's talk about Gokuldas Exports. Looks like day 2 of a run-up for this particular counter.
Well, absolutely. The stock was locked in upper circuit of 20% yesterday. It's up another 16%, which means it has gained over 35% in a matter of just 2 trading sessions. Remember, yesterday the company had informed the exchanges that they've expanded their global presence by acquiring Atraco Group for about $55 million. The company also said that it is a long-term positive considering the scale of the acquired business. Access to low-cost duty-free manufacturing locations and long-standing relationships with the customers is the primary advantage of this particular acquisition. We in fact spoke to the management earlier in the day, and the management said that the acquisition is priced right and it is already EPS accretive for the company. They also said that the transaction is expected to be completed by October end, and financial consolidation meanwhile is expected to take another 4 to 5 months. As far as company's guidance is concerned, they maintain their long-term guidance of 20% growth. So yes, second consecutive day of gains on the stock. The stock, as we can see, nearly 15% higher in trade today.
Okay, let's move on to the next stock, and that is Strides Pharma. Ankita, what is the news flow around this and why is it in focus today?
That's because today the company announced that it's stepped down wholly owned subsidiary, which is Strides Pharma Global Limited Singapore, has received approval for mycophenolate mofetil for oral suspension USP 200 mg from US FDA. Now the approval will bolster companies this portfolio, because they have already include many other products in which the company is a market leader. So this will really give a boost to this particular portfolio, and on the back of that the stock is going to be in focus. Currently the stock has cooled off a little and is trading towards the day's lows. However, the stock is going to be in focus today on the back of this news flow.
Alright, Nirav, let's put the spotlight on Bajaj Consumer then. And how is this one looking on the charts to you? Do you think an attractive play, at least for the near term, given the fact that it's already seen a rally? You think it will hold on?
Oh yes, definitely. So this is one of the few stocks which hasn't moved up much. Yes, definitely it has come up from sub 180 odd levels to 250. But there has been a slow and steady rise, and this stock has a very good potential because it has come down from 500 odd levels. It is still at only 250 odd. So there is a huge upside in this stock, but the pattern it is making is a rounding formation, which is a slow pattern. So I believe slowly but steadily this stock will go up towards that 300 level. So look to buy the stock at current levels. Every week you will see a 1 or 2% rise in this particular stock slowly. So a rise here is warranted. You can keep a stop loss of around 240 for your longs, and 300 should be your target.
Talk about these hotel stocks. Some of them are buzzing in trade today, whether you look at a Chalet Hotel, Indian Hotels, all of these stocks are buzzing in trade. And JM Financial has come out with a note on this. Yes, the preferred names are Chalet as well as Indian Hotels. What is also a factor that they are highlighting is that there's festive season, there's demand outlook for the chain affiliated hotels looks strong on the back of domestic demand improving. Obviously, foreign travel is improving as well due to G20 summit. Then there is going to be the wedding season. There's the Cricket World Cup as well. All these factors will see good demand for all these hotel stocks and hotel names as well. Also, in terms of the recent interactions that they have had, they expect and they believe that the FY24 is expected to be very strong for the companies and hotels, especially in terms of double-digit ARR as well as revenue power growth. And overall, they're quite positive on the hotel sectors, and they believe that we could see a good growth coming in, given that there are a lot of factors, positive factors, that could work out well for these hotel companies. They also believe the peak occupancies and ARRs for hotel industries are some time away, and the preferred pick, like I mentioned, Chalet Hotels target price 620 rupees per share, while Indian Hotels target price 450 rupees per share. On the back of this, we've seen both these stocks buzzing in trade.
All right, and with that, we come to the end of this edition of Market Fatafat. Thank you so much, Nirav, Forum, as well as Ankita and Ashesha for joining us on the show, taking our viewers through all the stocks that are buzzing in trade. But with that, we are totally out of time on this edition. So goodbye from Vinny, myself, and the team that put the show together. Stay tuned. Closing trades coming up next.